Out of 10,000 amateur investors chasing a trending stock, only one gets incredibly lucky and strikes it rich. Meanwhile, the other 9,999 lose their entire life savings, buried in overwhelming interest rates and bankruptcies. Yet, what happens next is the ultimate financial illusion. The single lucky individual who struck gold immediately sets up a masterclass livestream, preaching to the masses on exactly how to make millions. You sit in front of your screen, your blood boiling with ambition, and eagerly drain your wallet to buy their course. You stare intensely at this lone survivor, completely blind to the fact that their platform is built upon a mountain of 10,000 bankrupt corpses. This isn't a secret wealth code. In behavioral economics, focusing entirely on the highly visible winners while ignoring the massive sea of silent losers is a fatal cognitive trap called survivorship bias. Welcome back to BizBlueprint. Today, we are pulling back the curtain on the global wealth industry, dissecting the hidden statistics and reverse engineering the financial blueprint behind the biggest illusion in modern finance. We will uncover exactly how the tech algorithm and the financial media systematically brainwash you into becoming the next stepping stone for multi-million-dollar gurus. To understand the terrifying mechanics of survivorship bias in the business world, we must travel back to the year 1941. During the height of World War II, the US military brass was analyzing combat bombers returning from the front lines. The aircraft, wings, and fuselages were completely riddled with bullet holes. The generals immediately made a decisive, seemingly logical move. Add heavy armor plating exclusively to the wings where the bullet holes were concentrated. But just as they were about to execute, a brilliant statistician named Abraham Wald stopped them. He stated a cold, counterintuitive truth. You are looking at the wrong place. The bullet holes you see only prove that these planes can survive being hit in the wings and still fly back. What you need to look at are the planes resting at the bottom of the ocean, the ones hit in the cockpit, and the engines that never returned. Wald's revelation exposed a devastating flaw in human logic. When you only study the survivors to find a blueprint for success, the conclusion you reach is almost always a fatal mistake. Fast forward to today's digital economy. The internet has become the ultimate amplifier of this exact fraud. Every single day, your feed is flooded with 20-year-old dropouts achieving financial freedom, or zeros experienced traders driving Ferraris. You look at your bank account with less than 4 digits, feeling like the most incapable failure on the planet. But here is the structural reality. The media only shows you the one person who leveraged debt, got lucky, and made millions. It completely hides the 999 ruined ordinary people who went bankrupt doing the exact same thing, because bankrupt people don't have the face or the platform to upload a video. To protect your capital from this systematic trap, let us break down how modern wealth systems weaponize survivorship bias against you, using the 4 core pillars of business analysis. When a celebrity guru sells you a business model, whether it's dropshipping, real estate flipping, or opening a franchise, they always project a highly optimized, low-barrier CapEx requirement. They show you the polished storefront or the automated dashboard. What they systematically omit is the hidden trial and error CapEx cost. The survivor had the hidden financial cushion to sustain multiple failed prototype investments before hitting a profitable product line. If you copy their baseline infrastructure setup, without their exact invisible capital runway, your initial investment will evaporate before you even cross the launch phase. In the standard survivor narrative, operational costs are heavily romanticized. Gurus tell you that hard work and grit can overcome high burn rates. But let's look at the data. A business model under intense free market competition requires massive customer acquisition costs and marketing OpEx just to stay visible. The survivors didn't just work harder. They happened to launch during a highly specific window of cheap ad algorithms and low interest rates. Trying to replicate their historical OpEx structure in today's high inflation market is a direct recipe for cash flow starvation. The most lucrative revenue stream for the modern successful entrepreneur is rarely the actual business they claim to run. It is the monetization of the survivorship loop itself. The guru who allegedly made $1 million in e-commerce quickly realizes that e-commerce has tight margins and high risks. So what do? They pivot to a zero inventory, ultra high margin revenue stream, selling a $998 course to you. By packaging a highly volatile personal experience into a universal financial product, they extract millions in recurring cash flow from thousands of desperate buyers, effectively achieving wealth by selling a map to a gold mine that has already run dry. Survivors always showcase their peak gross margins while completely erasing their operational net margins from the screen. They shout about $100,000 in revenue, but hide the $95,000 spent on ad spend, platform fees, and inventory write-downs. The regulatory frameworks of business dictate that the break-even point is a moving target. When the market conditions shift, those thin net margins instantly flip into catastrophic losses, causing immediate liquidation. Understanding survivorship bias is not meant to make you bitter toward wealth, nor is it meant to turn you into a cynical conspiracy theorist. It is designed to trigger a massive cognitive upgrade. The ultimate cure to this modern financial curse is simple but deeply counterintuitive. Stop worshiping the exceptions and start systematically studying the failures. When evaluating a new career path, a startup sector, or an investment asset, do not look at how much the top 0.1% is making. Go look at the bottom 80% of everyday operators and look at how brutally difficult their daily survival is. Analyze how businesses actually go bankrupt, where they bleed cash, and how they step into regulatory traps. Reversing the data pattern of failure will protect you from 99% of the financial pitfalls in life. Successes is highly uncopyable. It contains far too many invisible variables of timing, luck, and macroeconomics. Failure, however, is highly structured, predictable, and systematic. If you learn to systematically dodge every fatal trap on the map, the space left over is your ultimate zone of survival. Real maturity in personal finance means breaking down the myth of the overnight miracle, tuning out the fake digital prosperity, and focusing purely on building wealth within your rational circle of competence. What is the biggest financial miracle story you've spotted online that turned out to be pure survivorship fraud? Let us know your thoughts in the comments below. If you want to master the real economics of cash flow, make sure to hit that subscribe button. We will see you next time, right here on BizBlueprint.